Alright, listen up. Gold just hit $3,357 an ounce, the highest price in history. This isn't just about jewelry or inflation. This is a signal. And the world's richest players are already making moves. So here's the deal. Why now? Geopolitical tension is rising, inflation is sticky, and central banks, especially China and Russia, are buying gold like never before. They're preparing for a new financial order. And they're not betting on the US dollar. Here's the playbook. Gold moves when fear moves. And this kind of price action means investors are protecting their wealth, not chasing risk. The markets are flashing caution. And smart hustlers should pay attention. So what's the move? Don't need to go out and buy physical gold. Look into gold ETFs, mining stocks, or even exposure through diversified portfolios. But don't chase hype. Play this like a strategist. Buy fear, sell noise, stay focused. Here's the reality. This gold surge isn't just about metal, it's about power. A silent financial war is playing out and gold is at the center. If the dollar slips, gold rises, and if the world loses faith in the system, the ones holding gold win. That's why China's state-owned gold companies have been buying like crazy. It's why Russia's stockpiling gold for its future. They're all making a bet on a new financial order. So here's your assignment. Don't panic, stay sharp. Understand the global chess moves because this is just the start. So let's break it down further. Here's what you need to know. Gold isn't just a pretty shiny thing. It's a store of value, a way to protect wealth and an alternative to currencies. When things get shaky, people and countries turn to gold. Right now, geopolitical risks are at a fever pitch. From the war in Ukraine to tensions in the South China Sea, everyone's on edge. This uncertainty drives demand for gold. Then there's inflation. It's still a pain point, especially with everyday necessities. While the Fed is trying to tame inflation, investors see gold as a hedge against those rising prices. But the big players are central banks. They manage a country's financial assets, and gold is a big part of that. Recently, central banks, especially in Asia, have been buying a lot of gold. This is a sign of two things. One, they want to diversify away from the US dollar. And two, they see gold as a safe investment. Now let's talk strategy. If you're thinking about investing in gold, here are a few options. You can buy gold directly in the form of bullion or coins. But if that's not your vibe, you can invest in gold ETFs or mining stocks. ETFs are like baskets that hold different assets, in this case, gold. So when gold goes up, so does the ETF. Mining stocks are a bit riskier, but they can offer higher returns if you're into that. The key is to think long-term and be patient. Don't try to time the market because that's a risky game. Instead, dollar cost average your way in and hold. And remember, gold isn't the only option. You can also look into other precious metals like silver or platinum. They might not be as flashy, but they can be great additions to a diversified portfolio. Here's the bottom line. Gold hitting an all-time high is a wake-up call. It's a sign that the world is changing and we all need to adapt. So stay informed, stay open-minded, and stay focused on your financial goals. This is HustleScope, where we decode the chaos and give you the edge. Subscribe now and stay 10 steps ahead. The world's changing fast. We'll make sure you don't miss a beat. Alright, that's all for now. See you next time.